Hey, what's up, my friend? So in today's episode, I want to share with you five trading lessons that I've learned from 5 years of losing. So here's the thing, right? It took me about 4+ years, right, before I became a consistently profitable trader, or till the point where I actually see profits, right, from my trading account. So 4+ years is almost 5 years. So in other words, I have been losing for close to 5 years, right, before I see the light, I see the green, right? So in today's episode, I want to share with you 5 lessons that I've learned, and hopefully, right, you don't have to take 5 years like me. Hopefully, I can help you reduce your learning curve. Sounds good? Then let's get started. First thing first, number one, you must have a consistent set of actions before you get a consistent set of results. So let me ask you, do you want to be a consistently profitable trader, or do you want to be a consistent trader? Yes? Then guess what? Your actions must be consistent. It's like, duh, if your actions are not consistent, then how do you expect to get a consistent set of results? If one day you're using Fibonacci, the next day is price action, the next day is quant trading, the next day is breakout trading, then pullback trading, then your results will be all over the place because your actions is all over the place. Make sense? There's nothing, rocket science to this. It's just common logical sense. If you want a consistent set of results, you must have a consistent set of actions. So a quick tip I have for you is that if right now your trading is all over the place, you're trying everything and anything, it's not wrong. It's kind of like the rites of passage, but you don't want to be all over the place. So first and foremost, you want to ask yourself, what do I want out of trading, right? Am I looking to generate a consistent income? Am I looking to just grow my wealth over time? Am I looking to just capture trends in the stock markets? Once you have defined, right, your goals, then you can find the right trading methodology to meet your goals. So for example, let's say you're a stock trader and you just want to, capture trends in the stock market, right, to make money in bull markets and maybe in bear markets not get killed. Then what you want to do is to master, stock trading methodologies, right, that let you profit, right, in uptrending markets. In maybe it could be a momentum stock trading strategies, a trend following stock strategy. So once you've defined, right, what you're trying to achieve, then you can find the right trading methodology, right, to meet your needs. Okay, so that's a quick tip for you. Number 2, you must have an edge in trading. So it baffles me, right, to know that there are a lot of traders out there who just thinks that, trading is 70-80% trading psychology. It's all about looking for a minimum of a 1-to-2 risk-reward ratio. It's all about managing your risk. Well, you can have the best trading psychology. You can have a minimum of a 1-to-3 risk-reward ratio on each and every trade. But if you don't have an edge in the markets, you will still bleed. You will still lose money in the long run. So let me just give you a very simple analogy, okay? Casino, right? Let's say you, a person, wants to go to a casino and to beat the casino and make a profit from it, right? You bring the best psychologists with you to pump you up. You practice sound risk management. You bring adequate capital. You risk a fraction of your capital on each gamble of trade. But guess what? In the long run, you will still lose money to the casino. And why is that? And it's all for a very simple reason. Because the casino, they have a mathematical edge over you. Now, some of you might be thinking, but Rayner, in trading, right, it's not maths. It's not so straightforward like casino doing maths. I agree. That's why when you trade the markets, right, you want to make sure that the trading strategy that you're using, whether it's back-tested or forward-tested, gives you an edge in the market. It shows you a positive expectancy, like maybe over the last 5 years, the last 10 years of data set, when you apply your trading strategy, right, it shows you that, it makes money historically. So that could give you a chance, right, that when you trade the live markets, you could possibly make money as well. You might think, oh, Rayner, backtesting is useless, doesn't work in the real markets. I agree. Doesn't mean that backtesting work, the live markets will work. But what I can be sure with you is that if your trading strategy fails during backtest, you can forget it during the live markets. Okay, but if your trading strategy works during a backtest, there's a possibility it could work in the live markets, and that's the purpose of doing backtests, right? To kind of evaluate, right, which strategy are worth exploring and venturing into. Okay, you must have an edge in the markets. No questions asked. Number 3, there's more than one way to skin a cat in trading. So, take me for example. When I got into trading, right, I had this mindset that trading, there's a certain type of trading strategy that works, a certain way to trade the markets only that the pro traders knows that I don't. And that so-called conspiracy theory that I had was that, they could read the order flow, they can read the depth of market, the bids and offers coming in, and that's why they make money, in the markets, right? That's something that, retail traders seldom have access to. And I thought that was the way, right? The only way you could make money, right, from the financial markets. And boy, I was wrong, right? That is one way to trade the market, right? That mainly is the scalper's domain, right? They study the order flow, the bids and offers, and make a split-second decisions. And that's just one way to trade the markets, right? If you want to go to a more quantitative approach, you have quantitative traders who trade the market using fixed mechanical rules. Then you have traders who just simply rely on let's say technical analysis only, like trend followers. If price goes up, they buy. Price comes down, they cut their loss and stuff like that. Traders who just rely on technical analysis. Then you have traders who relies on both technical analysis and fundamental analysis, right? That is the camp where what they call it, the how to make money in stocks, right? From William J. O'Neill, they use the both fundamentals and technicals to trade the stock markets. And then you have also the discretionary traders who trades using the price action of the markets only. So you can see that there are many ways to skin the cat, and there's no one way, right way. There are many ways, right? You can make money from the financial markets. So don't think that there's a holy grail out there, right? Because there really isn't. Fourth thing, right? Those traders that make money fast, they also lose fast. So in essence, what I'm trying to say that if you make money fast from trading, you will likely lose money faster from trading. Because the reason why you make fast money from trading is because you're taking excessive risk. And if the market turns against you, or when you get overconfident, you take on even more risk, you lose even faster. So in trading, it's not the rabbit that wins the race. It's the turtle, right? The one that's slow and steady and consistent over time that compound their returns, right? Those are the ones that win in the long run. This is a marathon, not a sprint. Sounds cliche, but true. And finally, the fifth lesson that I want to share with you is model success. Not just in trading, but in life, right? If you want to get somewhere, the cheat code is to find people who are already successful doing what you wish to aspire and just copy them. So for me personally, I want to be a consistently profitable trader. I want to make money from the financial market. So I asked myself, what were professional traders, hedge funds, what were they doing to make money from the financial markets? So that led me to trend following, where I realized, there are millions of billion-dollar hedge funds that employ a trend following approach, right? And they make money, for years and decades even. Where there's even a book, right, The Turtle Traders, that talks about this trading methodology. Then that led me to explore other domains like mean reversion trading, systems trading, etc. So really, if you want to find trading success, find someone who is achieving the results that you want, model them, understand their thought process, how they achieve it, right? Their process, their strategies, their mindset, and high chance if you can follow it, right, you will likely get similar results as them. Not exactly, because we're all here wired differently, but you should be at least in the right direction. Okay, so this doesn't just apply to trading, it can apply to business, or maybe even doing well for the exams. Find a top student, what they're doing right, model them. Same concept over here. Okay, so with that said, right, let me share with you again the 5 lessons that I've learned from 5 years of losing. Number 1, you need a consistent set of actions, right, to get a consistent set of results. Number 2, you must have an edge in the markets. Number 3, there's more than one way to skin a cat in trading the markets. You can use TA, FA plus TA, quant trading, discretionary trading, etc. Number 4, if you make fast money in trading, guess what? You'll lose it even faster. And number 5, model success. Okay, so with that said, I wish you good luck and good trading. I will talk to you soon.